What's up, guys? It's Chris Conlon, your home lending guru here in California. And what if I told you that mortgage insurance is not the villain it's been painted as? Now, most people think that banks and lenders use mortgage insurance just to take your money. But what if I told you that mortgage insurance can be used as a tool to keep more money in your pocket, close on a home faster, and have the bank take all the risk? Today, we are busting myths. We are breaking down exactly what mortgage insurance is, and I am going to specifically show you how you can use mortgage insurance to your advantage. Now, banks and lenders do not want you to know these top secret strategies when it comes to mortgage insurance. And I use this all the time with my clients to get them into their dream homes while keeping more money in their pocket. If you're here to learn more about real estate and lending, you have come to the right place. Now, learning how to maneuver in the wild, wild west of lending and real estate can be ultra confusing. Now, this channel is going to bring all that to you. So what I want you to do is like this video and subscribe to this channel, and that way you can always come back to get your questions answered. All right, so let's talk about the basics. If you're putting down less than 20%, you are more risk to a bank. So they are going to require mortgage insurance. Now, some of the acronyms that you will hear are MIP, which is Mortgage Insurance Premium, or PMI, which is Private Mortgage Insurance. Now, again, it all means the same thing. Now, these are typically going to be on conventional loans and always on FHA loans. It's similar to gap insurance on your car. Now, let's say you get into a situation where you can't make your car payment, your gap insurance is going to kick in. Now, let's say you buy a home for a specific value and you get the appraisal and it comes in less. Now, that is where your mortgage insurance is going to come into play. Mortgage insurance is not there to protect you. It is there to protect the lender or the bank in case you default and miss your payment. Now, before you say,
I don't want to have to pay for them,
we are going to flip the script. Without mortgage insurance, banks and lenders would not allow for financing of a home without having a full 20% down. Now, think about this. In California, where I live, most homes in this local community are anywhere between $800,000 to $1 million. Now, 20% of $1 million is $200,000. Now, unless you have $200,000 sitting in your bank account, sitting in your stock account, have a wealthy uncle or aunt or grandparents, then home ownership just might be out of reach. If you think that is expensive, just think about the cost of waiting. Now, here in California, we are seeing a typical rise of about 5%. And that $1 million example I was just talking about, if you think that you're gaining 5% year over year on your equity, that is $50,000 every year. So if you wait as you're saving up money, you are thinking about interest rates going up. You are thinking about the same house that was $1 million in 2 years is now worth 1.1. And guess what? Your rent keeps going up. If a landlord keeps increasing your allowable rate of 4 to 10%, trying to save money is going to be ultra expensive and costly. I know mortgage insurance can be ultra scary, and I totally get it. But let's talk about a couple of different scenarios. Now, you have client A. Imagine this, they are a 780 credit score. They have 17% down. Their debt to income ratio is very low. Now, they are going to get a better rate on mortgage insurance than customer B. Now, client B, you are at a 620 credit score. You've got a super high debt to income ratio, meaning that you are at 50%, and you are also looking at a condominium. That is going to influence your mortgage insurance rate. But hey, without mortgage insurance, you wouldn't be able to get into a home without 20% down. And remember, it is not forever, but we are going to get into that later. Gap insurance is built for if you own a car and you are financing, and let's say you get into an accident and the car is worth far less than what you actually owe. This is where gap insurance will kick in and cover the difference. Now, mortgage insurance is very similar. Think about if you were to buy a home and the appraisal came in lower. This allows you to borrow more upfront without having to come in with a massive down payment. Unlike a car where it typically depreciates every time you drive and every time you add a mile to it, it's going to go down in value. Now, homes typically appreciate, meaning that they go up in value over time. Now, this is where Gap insurance and mortgage insurance are very, very different. For conventional loans, once you get to an 80% loan to value, meaning that you have 20% worth of equity, you can request to have the mortgage insurance come off. Now, if you actually get to 78% loan to value, it's organically going to fall off on your next mortgage payment, which is super helpful to understand. Now, with FHA loans, this is going to go on in perpetuity, meaning that you will always have mortgage insurance until you refinance out of an FHA loan. And this is the part that nobody talks about. Mortgage insurance is not a penalty. Mortgage insurance is actually a tool, and this will help you keep more money in your pocket. Here's an example of a home purchase with or without mortgage insurance. Now, let's say you're buying a $500,000 home and you were coming up with a full 20%. That is $100,000 down. That's a lot of money. Now, on the flip side, let's say you're talking about the same $500,000 home and you're coming up with 5%. That is only $25,000. Now, yes, you're going to have mortgage insurance, and let's say it ranges anywhere between, I don't know, $150 all the way on up to $600. You're keeping $75,000 in your pocket. Now, can you imagine what you can do with $75,000 extra dollars? Now, that is a lot of money. You could, in theory, if your income supported it, you could go and buy 3 other homes with $25,000 down. You could go and buy a new car to match your new home. You could buy all the furniture to fill up your new home. The list goes on. Did you know that there are multiple ways that you can pay for mortgage insurance, and you do not just have to have it on your monthly mortgage payment? You can finance it over time, meaning that we could take one lump sum and spread it out over 30 years. It can be very minimal when it comes to your monthly payment. Now, you can also do one large payment where you could pay that in cash. The other secret hack that most people don't know about, you can ask the seller to pay for it in one lump sum. So there you go, mortgage insurance, multiple different ways to pay for it. Bottom line, mortgage insurance is an option that gives buyers more flexibility in the long run. Now just think, mortgage insurance is not forever. There are certain ways that we can use to get you into a home with a lot less cash out of pocket and let your money work for you in other ways. Before we wrap up, let's bust some of the biggest mortgage insurance myths out there. You always need 20% down. Nope, so FHA loans, minimum required down payment is 3.5%. Some conventional loans are as low as 3%, and there are some first-time home buyer programs that require 0% down. PMI, or private mortgage insurance, will last forever. Not true. Mortgage insurance automatically drops off once you hit 78% loan to value. And once you hit 80% loan to value, you can call and request to have your mortgage insurance premium dropped. PMI is a waste of money. Actually, it will help you get into a home sooner and help you keep cash in your pocket, especially in a rising market. Knowledge is power. The more you know, the more you can use these tools to your advantage. Now that you know the truth about mortgage insurance, I am so curious, what do you think? Now, do you think this will help you get into a home sooner? Do you think that mortgage insurance is not a bad thing? Have I changed your mind? Let me know in the comments below. Now, also let me know, have you had a bad experience with mortgage insurance? Have you heard any horror stories? I would love to know. Leave those down in the comments below. Let this conversation get started. Once again, guys, I am Chris Conlon, your home lending guru, and been doing this for over 20 years, have an absolute passion for anything real estate, anything home lending, and especially anything to help others. Now, do me a favor, like this video, save it somewhere so you can always go back. And if you know anybody that would find this valuable, please share it with them. Now, one last thing before we get going, subscribe to this channel if you are asking anything about real estate, because it will all be located right here. Talk to you soon.